Good morning, traders. Today is Friday, December 23rd. Getting this episode out late because I wanted to take my time and get a lot of important information in it and not just rush it for the sake of getting it out at a certain time. So, I wanted to call your attention to the last four big, I'll call it important events that have all happened overnight. After hours, when none of us could control it. Okay? Let's call your attention to the news from Japan back on 12/19 at 10 p.m. Remember this big move down? Boom. Okay? And then overnight, the markets took it back and got us back to the channel bottom. Okay? That's one example of an event that's happening overnight out of our control. And then on 12/20, the day after, or the night after, we reclaimed the channel bottom during regular trading hours, but then overnight it went ahead and advanced, right? It advanced on us. Okay, so that is another example of something that's happening overnight. Okay, 12/22 yesterday, yesterday. This is the move that was decisive for me. This big move, this major rejection, never mind the GDP news. Never mind the GDP news. The markets already knew that news was coming out because it was basically all night, even as of like 4 p.m. close until, I think it was about 3:15 a.m. All night, it could not overtake this major line I was talking about a couple nights ago. Major resistance line. This is the weekly SMA 20. It was also on the 4-hour chart. It was the 4-hour EMA 50, right? It was also the 1119 low for SPY. So I emphasized it 2 nights ago. This is a major point. And it proved to be costly, as you see right there. This proved to be the line that the market makers has designated as one that you are not going to cross it. Okay? And not only that, even coming into the morning, I thought, okay, well, let's just see if it can defend the channel. Defend this channel, because I knew that was critical too. That was critical to defend the channel, right? Because it was just, we're making a big deal out of it the whole time. It just sliced right through it. Just went right through it, like decisively below it. It didn't even try to bounce, or it just went boom, big red candle right there. That was also telling. I said, oh no. That's why I use the word decisive. It was decisive. Okay? Way more than any of the previous, like from this point and backwards, way more decisive than any of that previous. I'll use TC's fellow subscriber and viewer, TC's words, controlled demolition. That was controlled demolition. That was not decisive, right? That was not decisive. This move was decisive. Okay? I'm making the distinction there between the controlled demolition, right, over the past week or so, and what happened yesterday. Okay, I'm going to show you like 7 examples. Compare what happened yesterday to 6 other times in the past. Okay, so, and then this morning, just this morning at 5 a.m., we met channel resistance. Basically, the market makers pumped it up after that huge decisive move down, pumped it up at the end of the day yesterday. You saw that. But now the channel is resistance. So before, the SMA 20 up here was resistance. Now the channel is resistance. See what I mean? It's now resistance where it currently was support a couple days ago. Okay? And for a long time, for over a month, the SMA 20 was support. Now it's resistance. Okay? So, um, before we get into, oh, is this the slide that I want? Yeah, it's good enough. Yep, yes. Ultimately, I think we are going to retrace back to the 11.9, which is this blue star right here. See that level? Here's the dash line that I drew right here. I think that's where we're going to retrace to. We are looking at a likely 100% retracement from 11.9 right here. Here's your starting point. 11.10 was CPI. 11.10 was CPI. Huge move up into all of this, but now we are likely looking at a 100% retracement to 11.9, which puts SPY futures at 37.51. I think ultimately that's where it's going. Okay, so this juncture is going to be important because if you cannot hold 37.51 right there on 11.9, right? That's if you cannot hold that and you start going below it, now if you can imagine all of this, if you just cut it out and now you start to imagine yourself going back to the 11.9 date and losing this point, making a lower low. See what I'm saying? Can you picture that? So hopefully you can. That's basically what this dash line is. You can't hold this line. Now you're just continuing a lower low from 11.9. Does that make sense? Okay, so that's basically where I think we're headed. So now that the weekly SMA, it was soundly rejected. Soundly rejected. I would have still thought that, okay, well, it could still bounce had it either bounced off of the channel right here or stopped somewhere that is higher than here, right? Made a higher low, but no, you made a lower low. See that? You made a lower low. So, and I'm counting, this is the 1 hour chart. I'm looking at the wicks. I'm not looking at the close of the day. I'm not looking at the daily candle at all. I look at how low do the wicks and where do you start closing? For example, in this example, I can zoom in. It's hourly chart. See, you're closing hourly charts down there. You're closing this candle below that point. You close that candle below that point. That's a problem. You start closing hourly candles down there. That's a problem. Okay? So, yeah, I mean, this move, this big move down that just sliced right through the channel line and made a lower low compared to whatever day that is, 3 or 4 days ago. That's why I say it was decisive. It was decisive. Okay? So, so there you have that slide. Now, left-hand side, 15-minute chart. I usually don't show this. This was last night. SPY futures last night, 15 minutes. Okay, clearly you see price going up, trying to get back to the channel, right? MACD going down. RSI going down. Okay? That's your ominous sign. That's your ominous sign. Okay? You're having bearish divergences here. Already developing. Okay? Right-hand side. This is this morning when core PCE came out. Notice, let's start with SPY. SPY went down, but then went up, right? So that's the blue up line. Okay? Went down, then went up. Blue up line. MACD didn't follow. It went bearish. RSI did not follow. It went bearish. Even checking money flow went down. Okay? So basically, you're looking at a head fake. It was a head fake, and what happened? Down, 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 down. Okay? Let's compare the VIX. VIX initially, actually VIX initially went up, but it did go down. making a lower low, right? See that here clearly. Clearly, that's a lower low. But the RSI down here made a higher low. Okay? Made a higher low. Now this RSI right here, this point is not, this is not bearish divergence because that went down too. See, that went down and that went down. So that's okay. But if the higher low, despite VIX making a lower low, that's bullish for the VIX. Okay? So, wanted to point that out. Now, and probably when I conclude this, I'll get to the actual live. Why don't I just do that now, and then I'll pick up again momentarily. Okay, here's the live chart right now. So it's, you see, here's the 30-minute chart for SPY. Wick down, wick down. It's now getting wedged in between the SMA 20, EMA 50. Something is going to happen. And that doesn't look encouraging when you start looking wick down, and now you're getting wedged in between your own EMA and SMA lines. Here's another example. 65-minute chart. 65. This was resistance on the EMA 50 on the 65-minute chart. Now it's not even hitting resistance and getting wick down red candle. Okay. So here's the 5-minute chart. It's clearly trying to form a wedge. It has no choice because every time it goes up, it gets pushed down. See, there's a lot of wicks. Wick, 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 wick. That's a lot of selling pressure against it. See what I mean? Because you're basically right now up against the bottom of the channel, and now the channel is now resistance. Okay, so as you see here, look at the EMA 50. That's resistance. EMA 50 on the 65-minute. That's resistance. So you got resistance on the EMA 50 on both the 30-minute and 65-minute time frames, right? And then this morning, as I showed you guys earlier, you had bearish divergence, even though this point was the high point. Yeah, see, I'm pointing at it right here. This point was the high point right there. Look straight down at the RSI down below. That's lower. See that? See where that black dot is on the RSI? Compared to this point was the high point on the RSI. Look straight down at the RSI now. But that's a lower price point. So that's bearish. Okay? So, even though you guys never really hear me talk about rising wedges being bearish, because I look more at the like MACD and RSI and look at other indicators to tell me if it's really bearish, like wicks, wicking. In this case, I could say currently this wedge that is forming is bearish because I'm looking at other time frames that show me as wicking. I'm looking at the EMA, SMA lines that told me it's getting sandwiched in between. It's going to get squeezed, right? See what I'm saying? Okay, so let's go back to the presentation. When I said the move was decisive, here's why I'm saying this. Okay, so this is the 5-minute chart. Yeah, 5-minute chart for last. Actually, this was last night. I remember this is before the big move down. On the 5-minute chart, there was, okay, so the price is clearly going up. See there, going up. MACD going down. MACD is going down. See that? And then it continued down, waterfall. Okay. Clearly that was the weekly SMA 20. Major resistance that I was referring to a couple nights ago. Major resistance. Okay. Yeah, see, and then it came down here and it kind of consolidated for a bit and then it just boom, lost all of it. That is a decisive move down because it went down. Here's the 5-minute negative 13 line that I drew, the blue line. It went all the way down here. And I'm going to show you a bunch of other examples of what happens when, in the past, like 6 other examples, when you touch that blue line. You went past the negative 8 line. Negative 8 is already bearish. You went to negative 13. What happens in the following days after you hit that the blue line? Which is why I was suspect of this big impulsive move. You're going to see other impulsive moves exact same way too. There's impulsive move up only to fall the next day or the day after. Okay, so 5 minutes chart yesterday. Basically, it's okay. So this is the details of this. Okay, so right, this is when you fell, and then the market makers decide, now let's just pump this up one more time, knowing that it's going to fall again. Okay, so see that there? That's the move down, negative 13 yesterday. And into last night, you know, you're having downward bearish divergence even on the 5-minute. I showed you the 15-minute earlier. Not here, but the 15-minute. See, now you're having bearish divergence on the RSI. Last night on this is the 5-minute. Okay, so we're gonna look through some examples of the 5-minute negative 13 blue line. Okay. All right, here we go. 12.6. Right? Oh, 3 weeks ago. Here's an example of the 5 minutes chart. Oh, you can't quite see the blue line, but it almost hit it. It's down here. It's down here. You can't quite see it though. So look at the impulsive move up, right? Look, see, it kind of makes a higher low. Impulsive move up, only to go down the next day. Right? Impulsive move up, only to go down the next day. So that's that example. 12.14. Okay? Here we go. Here's the blue line. Decisively gone down. Hit the blue line. Tries to come back up. Makes an impulsive move back up. Like this. Impulsive move back up. Only to do what? Down and down and down. Okay? When you... This is just to show when you take that, when you sustain this kind of damage, hit that blue line, the negative 13 line on the 5 minute chart, when you sustain that kind of damage, you can't bounce back the next day. It's like you taking an injury in sports. Like you got hurt in that game, you're not bouncing back the next day, right? You just can't do it. You just can't do it when you sustain that kind of damage. Okay. This kind of damage was not seen in the controlled demolition, using TC's words. Okay? So, let's look at 11.15. Here we go. Blue line, boom. Impulsive move back up. But what ultimately happens? So, this is after hours, by the way. See, this is after hours. Impulsive move back up. Oh, it tries to pump it. You know, on this particular day, I don't know, it must have hit resistance or something. Only to go down even further. See that? Only to come back down. Could not sustain it. It was not sustainable. You're getting bearish divergences in overnight. Okay? 12.2. Boom, hit the blue line. Impulsive move back up. Ultimately, what happens? Down we go even lower. Okay? Let's look at 11.1. 11.1. Boom. Hit the blue line. Impulsive move back up. Here we go. Oh, this must have been 11.1. 11.1. Was that... that was some move. But either way, look what happens. Even though you had another crazy impulsive move back up, that made it even worse. Down we go. See what I'm saying? It's... once you take this kind of damage, you can't just bounce and then go back up. Bounce and go up and have a sustained drive up. Okay, that's what I'm saying. You cannot have that kind of sustained drive up when you take the hit. Okay. 11.8. Come down, hit the blue line. Negative 13 on the 5 minute chart. impulsive move back up, ultimately to go down more. Okay? So I just showed you a lot of examples, a lot, where you take that kind of damage, you're not going to bounce back the next day. And what I just showed you earlier about, well, yeah, there was divergences all night, even though the market makers are trying to pump it. But now you're hitting up that channel bottom. That channel bottom is now resistance, right? And now I showed you earlier on the real-time charts, it's that wedge. It's on the 30-minute and 65 minutes. It's wicking down, wicking down, wicking down. See what I mean? That's not a sign of strength when you see those wicks, wick down, wick down, wick down, right? That's not a sign of strength. Not a sign of strength. Okay? So, that is basically all I wanted to show you. Feel free to follow me on Twitter. I was tweeting out some stuff this morning as well. And just trying to keep everyone updated on what's happening. You know, right now VIX has the upper hand. They're both trying to wedge. So we'll see where this goes. We'll see where this goes. If you like the content, please give it a like, share, subscribe, or click to be notified. And with that, that is all I have. Until next time, Agent 000 signing off.